It's about that time of day again. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Thursday evening, May 28th, 2015. Wrapping up the month of May. Wrapping up the final few drops of the month of May here. My last newsletter here for this week. We get another jam-packed newsletter. Boy, incredible week we've had. We're going to wrap it up here right now. Before we get into today's charts, though, I do want to remind you before we go into today's newsletter charts, everything I'm going to talk about tonight in our nightly newsletter, I teach to all of our students, beginner, intermediate, and advanced members at schooloftrade.com. Check out the website at schooloftrade.com. We got a free trial. You're going to love every minute of it. I can guarantee you that. Also, 3 things here on our trading blog. Make sure you're watching this video right now on our trading blog at sidewaysmarkets.com. There are 3 reasons why. First of all, you can download all my charts that I'm going to use tonight. Every single chart you see me using tonight, just follow that handy link right below the video. That'll allow you to download them all and use them for tomorrow. Also, second thing, I have a free pass for you as a guest to come out and attend our live trade room. If you're not a member of School of Trade and you're curious what it feels like to be a student, if you're curious what it feels like to be in our trade room, I'd love to give you a free pass. Come out and join me at your leisure, upper left-hand corner. And lower left-hand corner, we have a nightly newsletter mailing list. All I need is your name and your email address, and I'll shoot you over an email every evening, just about 8 p.m. Eastern Time, when this newsletter is ready for your enjoyment. 3 things, guys, don't forget. Download the charts, grab your free pass, and register for the newsletter mailing list. If you grab your free pass or you register for the mailing list, please remember I'm going to send you a verification email to make sure I got the right email address, and so you can approve me to send you more emails in the future. Boy, as I'm recording this right now, crude oil is completely fulfilling what we spoke about last night, right? Go back and watch last night's newsletter, and you'll see exactly what I'm talking about. I mean, it was like it was scripted out of a Hollywood movie. Let's dig in. We'll get to that news. We'll get to that crude oil chart in just a moment. Starting out with the euro, the 6E euro futures. Euro bearish this evening, almost finally at the highs of the bear channel. So we will be looking for selling opportunities at resistance levels overhead while using support levels as profit targets below. Remember, in a bear trend, there are a couple different ways right now that I can get short. The first way is going to be a reversal pattern off this high, right? A price reversal pattern off that high to get short. Another way to get short will be looking for some bulls to try to buy up at these highs, and when the bulls fail, that's a second way to get short. By the way, that's one of my favorite ways. One of my favorite ways to sell as price is rising in a bear market is to look for places where those uninformed buyers, right, would be trying to buy these highs, and where they slip and fall, you know where their stops are going to be. That's where I'm looking to get short, right, where those buyers are getting stopped out. Third option for tomorrow will be to wait patiently, wait for the turn, and then sell those rips, right? Sell the retracements, wave pattern short on the way down, right, to these support levels below you. Where do you think we're going to go here, though? Well, we get an ABCD measured move. Measured move puts us just about the 1,000 mark up here at 1003. Addition to that, we have an extension at 1040. So we definitely have a lot of interest in this area right here. And again, either reversal pattern short, a failed buyer pattern short, or we wait for it to make the turn and then we sell the retracements, right, with each new lower low as we go lower. A lot of drama coming out of the ECB this week. We got more on the schedule for tomorrow morning, so definitely be ready for this market to be a mover. And again, stay patient right now. The best opportunities to sell are going to come up above, and then your targets waiting below. You've got trend line target, you've got trigger zone target, you've got swing low target. And this is the euro, so probably not going to be tomorrow, but obviously the long-term target will be back down to those channel lows, right? We go from the low, up to the high, down to the low, up to the high, right? And then, of course, back down to the low. We've been waiting about 2 days for this to happen here on the euro, so we're definitely excited about getting that finally to fulfill its mission up to these highs so we can get selling short. Let's keep going. How about the gold? The yellow metal, gold, bearish. Yeah, very bearish, right? We talked about this last night. We got bear trap on Tuesday, bear trap on Wednesday, right? Or sorry to say Thursday, excuse me. We got a bit of a megaphone pattern going here, as you can see here on gold. It's just been bear trap after bear trap the last 2 days. I told you guys to be careful about these bear traps. You never want to sell those lows. You want to wait for bearish market, almost identical here. And you're going to see a lot of this tonight. There's a lot of this going on right now, except for the S&P, which is completely opposite. But on the gold here right now, we definitely know we're bearish. We're oversold. Our plan is to stay patient. If you're a seller, stay patient for price to go up. Test these highs, and then we'll bring it back down. Same thing what I talked about on the euro, right? As we get up to these highs, I can look for a reversal pattern short. I can look for a buyer failure pattern short, or I can wait for it to make the turn and sell those rips on the way back down. One thing to remember about gold here, please be aware we have rolled over to the 815 contract. I talked about it last night. Didn't really know when the volume would fully roll. You know, markets like crude oil are almost guaranteed to roll on the 18th of each month. Gold always seems to pick a day or two before or after to want to do its roll. We're now in the 815 contract, and we'll be there until the end of July. So you got plenty of time on the 815 contract here for the GC. So buyers, you get a very short-term window here to buy up to these highs. But remember, if you're a buyer in a bear market, you really can't ask for much. All you can look for is a scalp. So take that money quickly, lock out that risk, because be ready. There are going to be more sellers waiting in the wings up here to get price coming off those highs. We're looking good on the gold here, but let's see if we can get a little more intimate, right? Where do you think we're really going to get the option here to start getting short? And you can see here, there's that bear channel we have. A little bit more intimate chart here on the gold, a bit faster time frame, right? This will cut that previous time frame in half. We know we're bearish, no question about that. Second thing is we have a trading range. Now, these trading ranges, guys, are some of the most important pieces of information you can see on a chart. Ever seen those volume charts, right, where you see all the volume on the right-hand side? You know those really complicated, really difficult to understand volume charts? Well, I always find that skip the volume on the side and just look for a flattening moving average, because where you see those moving averages flatten out, that's where the most amount of volume is going to be, right? So I'll bet there's going to be a volume spike here, a volume spike right here, and of course that's where price would be wanting to go if these bulls take control, right? Back up around that prior trading range. You don't need to you don't need to overcomplicate it, in my opinion. Just look for those sideways ranges, and that's where you're going to see the majority of the trading volume piling up, right? For all you profile traders out there, you don't really need to overcomplicate it with all the order flow and volume analysis. The price action on the chart will tell you everything you need. Much simpler that way, right? Now, that trading range, don't want to get too far off topic here. That trading range, pretty important because it's giving us support below, right? Tag today. I won't regurgitate that. But most importantly, though, is it gives us range expansion resistance here. Now, conveniently enough, with this bear channel, we're seeing an undershoot of that low. So an undershoot of that bear channel low. Oops, sorry for the white out there. The undershoot of that bear channel low, right, says weakness from those sellers. Well, that weakness will most likely translate into an overcorrection. And so you'll notice, boy, very nice confluence right here between 97.1, 95.9, and this range expansion is pretty much right about the same spot. So this area right here is a definite area of interest for those sellers. And if you look closely back on our longer term time frame, it lines up right identical right there. There's that 97 right there, right? So this is where, between that 95 and 01.2, this is where those sellers are going to be looking to sink their teeth into a couple selling opportunities here, possibly tomorrow. We'll be waiting to see. Gold's been a little bit sluggish. We had rollover to get through. Tomorrow should be the day that this finally kicks out of this range here. And don't be surprised if we get a pretty decent move. We got GDP tomorrow morning. We got Chicago PMI tomorrow morning. We got a lot of important news events in the calendar for a Friday morning. And then last but not least, drum roll please, that's a megaphone, as you can see here. And that megaphone, now we always love seeing megaphones. Remember the beginning of the year this year? At the beginning of 2015, we had weeks of just megaphone after megaphone. I started calling it the year of the megaphone. We haven't seen one in a while. Here's one right here on gold. We did have one back here. And guys, when you see a megaphone pattern, your job is to buy the lows, sell the highs, avoid the middle, right? Mama said, don't fiddle with your middle, JJ. She was right. Don't fiddle with that middle. So here's the way I look at it. We have a downward trend, a bearish trend. We have a trading range, and we have a megaphone. I am definitely looking to sell that megaphone high. I am definitely looking to sell that range expansion high. I'm definitely looking, I know, right, to sell the undershoot, overshoot resistance up top here. So again, this megaphone pattern, it just throws fuel on the fire here for opportunities for us to sell. But we got to get price to get up there first. That's going to be the hardest part. Bulls, you have a very difficult job right now buying in a downtrend. Be quick to the trigger if you're a bull right now. And if you're a bear, stay patient. Stay patient for the best selling opportunities up at that high for all the bears out there. How about the S&P? Well, we nailed this one right on the head last night. The E-mini S&P, the newest addition to our nightly newsletter. As you can see, we're bullish on our anchor chart here this evening. Our plan is, there ain't nothing different with our plan for the S&P right now. Our plan is to keep buying support levels, using pullbacks to support, and use resistance levels above for targets. Couple important things you want to keep in mind on here. There's actually, I would say there's 4 important topics you want to keep in mind. One is the long-term bull channel. This long-term trend, it's very, very obvious. We've been talking about that here for the last week. 2 is going to be the short-term bull channel. That short-term bull channel, I'm going to zoom in on that in just a few seconds here when we go to our faster time frame, the 4 anchor on the S&P. So keep in mind that shorter-term channel, that's probably going to be your most important clue for tomorrow. And then not sure, this is the S&P we're talking about. This does not move as wildly as the gold, as crude oil, right? But we have a measured move here. AB, CD, right? So definitely want to keep an eye on this 38. I mean, we're probably not gonna see a 25, 26 handle day on a Friday, so it's probably not gonna be there tomorrow. But that's another important part of this puzzle. And then the 4th thing, which I think is also a very big important clue, is we've now slipped back into that range again. That trading range. Remember what happens here? We're bullish going into the trading range. As I said last night, be aware of the trap, right? It's a bear trap, the break of that low. What did I say last night? I said, don't you dare sell the first break of that low because it's going to come right back up in. That's exactly what happened here. So we know we've got the first break. We call it a fake break, a fake out breakout. It's a bear trap at those lows. Very, very simple. Bullish trend leading into the range. We break out, bear trap, try it again, bear trap. Why would anybody be trying to sell this market right now? Have you not picked up a newspaper or turned the television set on in the last, 2.5 years, right? It's really tough to be a bear in U.S. equities. The S&P is definitely no exception to that rule. So I would say right now, just like I said earlier, our plan continues the same exact way here. We're looking to buy at support, we're looking to buy at pullbacks, and we're looking to take our profit at resistance areas overhead. I've got the 23, we'll call that 24 even. I've got 26 up to 29.75. And really, these are going to be the most important levels of resistance here to be paying attention to. It's going to be that 29 3/4, 26 even, and of course, we'll call that 32, 31.90. We'll call that 32 because what should happen now is we should migrate our way up to that range high, right? We leave the range, come back in the range. We're going to try to run up to that range high. And of course, some wishful thinking out there for you bulls out there tomorrow. The measured move resistance is a little bit more than 25 handles up. So that's very, very unlikely that we get there tomorrow. What is most likely for tomorrow is we pull back a little bit, get a chance to buy that channel low, another bear trap at that low, trigger zone support buy, right? And again, we're going to be trying to hold a portion of it up to those resistance areas overhead. Let's dig in a little bit closer on this because I want to look at this channel a little bit closer here so we can give you guys a little bit better look at what the plan is for tomorrow. E-mini S&P, bullish, but currently overbought in the short term, right? Of course it is. We had this nice run up today. We're going to take our profit at this resistance here, 22 3/4, 21 1/4, and our plan now is to be buying those pullbacks. So stay patient if you're a bull right now. Look for buying opportunities at support levels below us and use those resistance levels above for profit targets. Watch out. Watch out for those bull traps at the highs. Do not buy these highs, guys. As we approach these highs, you cannot get into the habit of buying the highs. I realize you're excited and you want to participate, but you got to stay patient here, right? If you listen to my newsletter last night, I gave you guys specific instructions about buying on the pullback to that long-term bear channel. Remember this last night? If I zoom out on this chart right now, you'll see exactly what I'm talking about, right? Remember that long-term bear channel that we had? My exact words last night, wait for it to pull back and buy it off the high of that channel. It's exactly what ended up happening today. So right now we are overbought in the short term, obviously, looking to buy at support. We've got a plethora of support areas here. A little short-term trading range tells us we're probably going to get some traps down here at these lows. So we definitely want to be looking for buying opportunities right now on the S&P. And again, targets at resistance. I've got that, we'll call it 24, 29.5, 25 3/4. And then don't forget, the ultimate target always in these bull channels is going to be up at channel highs, right? Up at channel highs. Buy those dips right now on the S&P. S&P is not a market you want to be buying these highs, so be careful on that. We'll be trading the S&P tomorrow morning live in real time in our trade room. Come on in and join us. All right. Now, about 23 hours ago, my exact words were, if I had to guess, I would guess that the sell-off would occur today in crude oil before the inventory news comes out, and then by the time we came back together again tonight, we'd be trading back up at the channel highs. We didn't quite make it all the way back up at channel highs, but we are sure darn close to it. Medium-term channel, you can see here, we're right back at those highs right now. You couldn't have scripted it any more accurately. The API number last night came out as a build. It pushes prices down, and then the crude oil gods gave us a draw in inventories from DOE, and it jumps right up. Again, almost as if it was scripted the night before. A perfect bit of analysis last night on the crude oil, and you can see it came completely to fruition. We had a great time today in the trade room selling short down, and then this afternoon it was just up after that news came out. Relatively easy coming off the low of that channel. Now, where does this put us for tomorrow? Crude oil is bearish, coming off the channel lows. Just as expected, the reaction from today's inventory report pushes price off the lows, and our plan is to look for selling opportunities at resistance levels overhead, as well as, and this is the important part right now, in my opinion, for tomorrow, the easiest money you're going to make on crude, everybody's trying to call a bottom right now, right? So there are lots of bulls out here that are going to misread this. They're going to be too aggressive trying to buy this spot. Look for those areas of support where the buyers try and fail. Find out where their stops are going to be and get in where they get stopped out. In my opinion, that's going to be the easiest money that you're going to make tomorrow morning trading crude. Or if you're coming in Asia or in London, right, you're going to get to it earlier than I will tomorrow. So you've got your chance right now. We're up near the highs of this channel. And when we're up near the highs of that kind of a midterm, medium-term channel, remember what I said earlier, there are three ways to sell short in a bearish trend as price is rising. What were those three ways again? First of all, it'll be a reversal pattern. Trend line break, 3-point reversal, reversal pattern. Second opportunity, wait for the buyers to come in, wait for the bulls to come in, try to buy it, and when they fail, you know where their stop's going to be. Think about where you'd place your stop. Be ready for it to trigger, and then jump in that trade short going with the trend. Those poor, uninformed bulls right now. Now, I shouldn't say poor, uninformed. They may still be able to get a few more moves out of this thing. We may end ourselves up around these areas up top. You can see we definitely have quite a bit of resistance here, including, you'll notice we have this area of confluence. We've got two zones overhead, and this little spot right there, 59.15, we'll say 59.15 to 59.29, so say 59.15 to 59.30. This little area right there, that's an area of confluence. It's also a reversal line. I'll tell you right now, we get back up in this area right here, and you gotta be looking for those buyer failure patterns, reversal patterns, or be open-minded and be patient for price to come back down and then sell those rips right as we go back lower. I have no idea how far this price is going to go higher here because remember, traders in Asia, they're waking up right now seeing this bullish move. They're reading the news that we have already processed here in the U.S. So this could push a little bit higher. Don't get too aggressive. Wait for those buyers to fail and sell this sucker right back down. I've got support levels waiting for me below. That's about all I got for us here. I mean, it's a pretty simple strategy here on crude oil. Seller resistance, I can do that with a reversal pattern, I can do it with a buyer failure pattern, and I can do it by waiting for the turn to occur. How about the last chart here of the week? Just a beauty, just a beauty. Crude oil, again, is bearish, coming up off the lows of the bear channel. Our plan is to sell the highs of this channel at resistance levels and take profit at support levels below. Couple big clues on this. We got this bear channel. This, of course, is the faster of the anchor charts. We get this bear channel here overhead. Beautiful spot right at the highs here right now. I hope it's that easy for my friends in Asia. I mean, if it's going to be that easy, definitely be ready for those sells off the highs. I don't think we're going to collapse off it right now, though. Here's why. We have an overshoot of that channel low. This overshoot of the channel low, we talked about it earlier this week. When I see an overshoot, in this case of a bear channel, it's like we're playing a game of poker and the bears have all their chips in the middle. They're all in. They're fully committed. That's why when an overshoot occurs, we're normally going to see that snap back and an overcorrection, right? The bulls see it as a buying opportunity. The bears have to take their profit sometime, and then they're going to try to reload and then get back in at these highs here. So again, we will be looking for selling opportunities here. If you're in Asia, if you're in London, you should get a chance to get a swing at this thing. But if I had to guess right now, and I guess so far my guess has been pretty good this week. If I had to guess though right now though, we find our way somewhere into this 58, 58, 38 up to 59.25. This area, this overshoot area, what do we see in the last chart? The last chart was what, 59.30, something like that? I've got 58.78, 58.80 area. So that 58.80 area, another overlapping area of confluence, that's going to be a really tasty area to get short. So as we push higher here, look for reversal patterns to get short. I'm looking for failed buying patterns. Like I said, I think that's going to be your best option for tomorrow, the failed bulls. And of course, last but not least, wait for that turn and then sell those waves, sell those continuation patterns right on down. All right, guys, one more thing here. I know you guys are alone out there watching this video right now, but please remember, you are not alone in your trading career. I want to encourage you guys, stop over to schooloftrade.com, grab our free trial. We get a great team of traders here, one of the biggest community of traders in the world. We've been doing it longer than anybody else, and we help new students launch professional careers in the financial markets. We have 3 levels of membership, beginner, intermediate, and advanced, and I always have someone standing by 24/7 to give you guys a hand and answer any questions you may have. Guys and gals, great week this week. I mean, really great, fantastic, incredible week this week. We wrapped up an insane month of May. Can't say another thing. I mean, really can't say anything better about how this week's been, how this month's been. It's been a fantastic month, been a fantastic week. The next time I see you, we're going to be in June, baby. We're going to be in June 1st. Monday through Thursday evenings for my newsletter, Monday through Fridays for my trade room. Join the trial. Leave me a comment below the video, and you guys have a great summertime weekend out there, right? Gotta love it. Enjoy the weather. We'll see you guys tomorrow in the trade room if you're a student at School of Trade. 8 a.m. we open up. If not, I'll see you back June 1st. Adios, amigos. Bye for now.